All right, guys. Welcome to the show. Before we get started, I want to say, just because we don't run ads or anything like that, we only have one fee, and that's, if you learn something, you enjoy the show, please share it, leave us a review or rating on whatever platform you're listening to. So, but let's get started. So today, our guest is Trevor Reed. He is a real estate investor, mortgage, and insurance, you name it, he's done it. So, and then of course, jujitsu. So
Yep.
we might even talk a little jujitsu there, but wanted to jump in. So Trevor's got, some stories, experience, and I definitely wanted to bring him on the show to help have him kind of give some insight on the mortgage side of things. And then of course, talk just investing as well. So let's start there. Trevor, tell us about you and kind of how you got started and your story.
Yeah. I appreciate you having me on. I actually have an interesting avenue I got here. I actually moved here from Montana originally, and I was going to teach. I was going to move down here. I went to Austin initially to do business. The school was too much. I mean, The entire enrollment of that school, I think at the time, was almost more than the population of Montana. So when I moved here, I was like, this is a lot. And ended up coming up to Dallas. My mom had lived up here and moved to Frisco, and I was going to school, ended up getting a degree. I was going to teach math and in middle school.
Yeah.
Hated the politics of it, got out of it, and went into leasing. So I was in kind of the apartments. I was also doing like waiting tables, doing fine dining. And I would just start up from the asset management, doing just leasing and kind of learning the sales part of that. And then eventually moved up and ended up doing bouncing around, doing regional work, and then getting to manage large portfolios. So I typically was working with A and B properties, about 800, 900 units or so, and oversaw pretty much all aspects of that. And I did that for about 10 years. And so my emphasis is very heavily in asset management, especially as it pertains to tenants, tenant retention, kind of the good and bad of that.
Yeah.
And while I did that, I got my real estate license mostly because my first realtor was a little rough, and kind of realized, well, gosh, if I'm going to buy my own investment properties, having your license takes very little money to get. It doesn't take that much time to do.
Yeah.
And gosh, if you do one deal, it paid for itself for years over.
And the qualifications is what?
Yeah.
It's breathing, right? Hot breath.
It used to be even less. Like they said, if you had a degree at the time, I think when I got mine, if you had a degree, you just had to take, like contracts 1 and 2, and like you had to take like 5 classes, and that was it. Wow. Now it's a little bit more. Now I think
it's 6 classes now.
Yeah,
you can do that.
They've really upped it.
They have.
Well, I always joke, it's like any profession. We always look around. And you're like, if they can be a realtor, I can be a realtor. It's like that in everything. It's like if they can do loans, I certainly can do loans. So
especially that.
Yeah, it's gotten to that point. But I got it then, and I used it. I'd help friends and family and do. I was more into it then because it was mostly my wife and I, and then we started to have kids. And being a realtor is, if you're going to do it right, your time is your buyers.
So would you say you fell into real estate, or was it like family, kind of like as far as like you were going to be a teacher? Was that something that your family, you have a family of teachers, or was it something that just you kind of fell into it, or like kind of how'd that transpire? Because I asked that because some people that listen, they kind of like you said, I was going to be a teacher, and they just don't really realize that there's another area they can go do, and they don't talk about it or whatever. So how did that kind of transpire for you?
So I always loved teaching. And then I kind of found out that, well, you can teach in anything, right, whatever the subject matter is. And I kind of combined it, and I was like, well, I'm really good at math, so that'll be easy, right, in college. And then you find out that once you go get a math degree, it's like, you don't even deal with numbers anymore. And I was like, what was I thinking? Your senior year, this is terrible. But no, I come from a family of mostly first responders. Like my dad was in the police force. My grandfather was police force and veteran. And I didn't go that route, but I did always like teaching. I love kids. I have 5 kids myself, and love being around them and teaching them. And that was always something that was a passion of mine. It just was the politics in the schools kind of drove me to, get out, or at least start looking at different things. And I kind of looked at a broader picture at the time. I remember reading some article that was talking about, all the people who are multimillionaires or billionaires. That's the one thing they have in common. Every one of them had real estate.
Yeah.
Now, whether they were good at it or not, they might hire someone to do it for them, but their portfolio always had real estate. So in my mind, I was like, well, whatever I do in life, whether it's a teacher, a car salesman, or first responder, it's like, if you're going to want to take it to the next level or talk about that idea of financial freedom, almost always it involved real estate. So that was always on my mind, thinking, I'm going to do this one day, and then just didn't realize I was going to kind of get into that vein sooner than I thought. And being put into kind of the apartment leasing field, you just looked around and said, well, gosh, these apartments, these are like lots of tiny houses, and these are renting for crazy amounts. Now I know how to do this. Why can't I do this on maybe a smaller scale?
Yeah.
And that's where the single family home came in and started to go that route.
Did you step up to the plate of leasing with the intention of learning it, or going, I want to go there so I can do that? Or did you step up, go, that looks interesting, let me just try that?
It certainly was a stepping stone in my mind. I was like, all right, I'm going to get my foot in the door and see what this is like. But I had zero intentions of staying at that position. My goal was actually not even to be a property manager, because I saw how many hours they worked, and the trade-off to me wasn't there. So I wanted to always go as high as I could and learn about, to me, the things that were most impactful, dealing with insurance claims, dealing with, HR stuff, which is HR is, I don't wish that on anyone. And then just seeing the budget and how the money moves and where your biggest expenses are. And again, I'm looking at this once I got to that position and I was overseeing all the properties, I got to see that kind of from the macro and micro position and see where the pitfalls are and where a lot of owners, we talk with other owners and kind of see, where are they having problems and try to avoid those. And all of that is paralleled. Obviously, I was doing this for someone else's properties, but all of that information paralleled very well when I started to do my own, and just how to deal with tenant retention, how to maximize your rents, how to minimize your expenses, that played a really big part of it. So would you say that's what led you into going to mortgages and insurance? Or so
what kind of got you from, because obviously you learn you got asset management and all those things. And what kind of took you to that next step of, okay, it's time to do something on my own or whatnot, and let's go into mortgages?
So for me, it was the freedom.
Okay.
The big part about, being a realtor we kind of touched on is that, you're working when people are getting off work a lot of times. You're showing homes in the evening. You're showing homes on the weekend. You're showing homes on holidays. You're writing offers. You get all these deadlines. You're like, I got to get an offer in before 10 or whatever. And it can interrupt your life a lot.
Right.
And a lot of realtors, that's just how they are. And if successful ones, they're working
always.
And in the day, it's a little more low key, but they're looking for things. But again, they're driving a ton. And again, being from Montana, I hate driving. My wife drives us everywhere. Like, she'll listen to this and just nod her head. Like, I drive the speed limit. I'm the dude in the right lane, sometimes the left lane, and get yelled at. But I will go the speed limit, and I'm just like I left here for 45, 50 minutes early, even though it took half an hour. I was like, I'll just drive slow.
Yeah.
And my wife hates it. So she drives everywhere. It works out well. It was my game plan from the beginning. So I got to a point where I was like, I just don't like driving.
Yeah.
Like if I come somewhere, like when I came out to your gym and did jujitsu, I'm like, that's a 50-minute drive. Like that was
that's far.
Dedication. But
that's far.
Just all those little, and that sounds dumb that like, oh, you don't like to drive. Well, if you don't like to drive, being a realtor is going to be not fun for a lot of those trips. So all of that kind of combined with wanting to spend more time with family and have flexibility, went back to, again, lending. If you're looking at a Venn diagram, it's like real estate, lending. They're kind of hand in hand. You can't really, you can, but oftentimes they are needed on both fronts. So I was able to do loans and just work from home, have kind of my own schedule. I like to go back home, Montana. I can still do loans while I'm up there. Just gives me a lot of flexibility. And again, I really took a lot of the things that I learned from real estate and applied it to lending in the terms of, hey, I know what a realtor wants and doesn't want. I know it drives them crazy, and I know the complaints or compliments they're going to get from their clients, their buyers, and then try to just say, hey, I know what you're going through, or let's try to, take care of this on the front end so the expectations are really good. And it's been really helpful. And then again, the math side of it, I was like, well, I'm good with numbers and I can deal with guidelines, and I like the problem solving of like, hey, Misty didn't get a loan here. Let's go over here and see if I can make that happen. And then when you do, it's great for
rewarding.
everyone, right? Yeah, I mean, they felt like they had no answer to move forward, and then it was like, oh no, you're
a miracle worker.
Yeah, that other person. That's what they said, right? And really, it's just guidelines, all that kind of stuff. So I never minded it, but it was the flexibility and the ability to, again, kind of just stay within what I know and just kind of put a little bend to it, and it made me stronger at all the other things, because now I deal with tenants who, at some point, are going to buy a home.
Right.
And usually I pipeline my own tenants. So I want to talk to them. I want to be the resource in their life. So when they say, hey, you know what? I think we want to get a house. I'm like, all right, let's see if you qualify.
Yeah.
And you can kind of give them pointers along the way. And I just talk with people all the time, whether it's doing jujitsu or it's, going out at church or something like that, where they're thinking about getting a house, but they're about a year out, but they have no direction.
Right.
So this has given me the ability to give them kind of direction on the lending side so that they can make that transition at some point, while also keeping in mind kind of having a pulse on the real estate side so that they know. But yeah, at this point, I pretty much am doing all lending. I'll do my own deals for the most part in real estate, or if an investor that I've worked with for years is like, hey, can you help me find another house? I'll help them do that, just because we have kind of an established thing.
You're not tied to anything. That's the big part. You're, like you said, you can go to Montana. You can do it all from there. You can do all from here. You're not like, I got to drive around all day long. Not that I'm not downing. I mean, we've got agents and stuff, but it's like, I agree with you. You get a little more, you get more freedom.
Yeah. You can pick and choose who you want to help and when you want to help.
Yeah.
The good thing is I can get docs from someone. I work with people, for example, who are in California or Washington, right? They're 2 hours before us. And I typically stay up late to begin with. The kids will get in bed, or I'll go train, I'll come home, shower. It'll be 10, 11 o'clock at night. Well, they're sending me docs or calling me, and I don't have a problem with it, because I've kind of laid those expectations out that, hey, I'm going to be up.
Yeah.
Let's chat. That's totally fine. And they love it, because they can do things at 7 o'clock at night, and they think it's great. And to me, 9 o'clock at night is way better than 7. Because 7, if anyone has kids, is like,
dinner time.
Survival. Like that last hour is just like,
or you're on the mat.
So, or I'm on the mat.
What brought you to? Because you mentioned it. What brought you from Montana to Dallas? Like, why Dallas? So of all places, you're like freedom. What made Dallas the thing?
So I'm from Missoula, Montana, which is, it's like this at the time. I think it still is the second largest city in Montana. It's a college town. And
does it take forever to get around places? I know you say you hate to drive.
It's not really big, so the funny thing is down here, a lot of times it'll be, how far away are you? Oh, I'm 40 minutes out, 50 minutes out. Up there, it's miles. You're just like, oh, I'm a mile away, a mile and a half away. Like it's a different gauge of distance and time. And I really didn't have to drive. You could bike on a bicycle pretty much that whole town. It's just not that big. And it was a valley, and so you'd run up to mountains. So the town was kind of confined into that area. It's since kind of grown up and through the valley a little bit. But my thought process at the time is that I could always come back here.
Yeah.
Always. The job market in Montana is very difficult. There's just not a lot of opportunity unless you work for the state or something. And I really wasn't going that route. My brother works for the railroad, for example. One of the best jobs you could have up there. But again, if you're not going that route or working for the state, it's kind of tough. And I always thought, well, I can always, if things don't work out, I can come back.
Yeah.
So I was like, all right, I'm going to go down. My mom had already moved to Texas or Dallas. And again, I was going to go down and go to Austin. I graduated high school early, and I was thinking, all right, I'm going to do business, and went down there. And then again, like I said, hated it.
Yeah.
And then just resorted back to coming up to Dallas. I didn't want to go all the way back to Montana, because I was like, well, I really didn't give it a fair shot. I kind of came down, and it was like, all right, I don't want to go back, because everyone's like, oh yeah, you got out. That's awesome. And I didn't want to be like, yeah, and I'm back. So I was like, forget it. I'm staying. I'm going to give this a shot. We'll see what happens. And I actually almost went back home, because I I graduated early, so everyone that was my age at 17 was in high school during the day, and I was working at a grocery store because I transferred with Tom Thumb or Safeway. Basically, I was Safeway up there, transferred down here, and worked in a grocery store while I was 17. And I almost went back home, and then met a friend, and he was like, "Dude, you want to come play guitar and like hang out?" I was like, "All right," and then I stayed. I mean, that was legitimately the only reason I stayed, is because someone wanted to hang out at the time.
That's motivating though when you're like, I can't just go back.
No, I didn't want to be that guy. They were like, "Oh, and you're back." Like they did. I'm not saying like they did a parade to send me off, but it was like, hey, shout out to Trevor graduating early, going down to Dallas, and then I have to come back and finish out. Like I was like, oh, that'd be terrible.
You have a leaving party, and they're like, hell, we'll just have a coming back party.
Yeah, had like a big going away card, and it was like, and he's back. Why did I go to this? So I stuck it out, and then just stayed down. I ended up meeting my wife down here, and she hates the cold now, so chance of us living up there pretty slim. But good thing is being a lender, or the benefits of being a real estate investor, is that I can do that from Montana. If we want to go up there and take the kids up there for a summer, things won't stop.
Doesn't matter.
You kind of put that stuff in place, and that was really a big thing about becoming a mortgage broker, is that I could do that. And then you touched on it, getting an insurance license. Again, that's more of a passive. You kind of move from more of an active participation as a realtor to what I would consider like insurance as significantly more passive compared to the two. And it's all with the goal of have passive income, financial freedom, so that I can do the things I want to do. Yeah. Going forward.
Let me ask you, so most you see on both sides of the fence, right? Mortgages, investing. And I know we've had this discussion a little bit, but you don't have to give you can give some examples, but not have to name any names. But what's some of the stuff you see as far as I know you get to see investors' financials all the time. So what's some of the stuff that you would say that you would give advice or help for someone that's like, hey, this is what you need to do, or this is like a common mistake that you see a lot where you're like, man, these guys do this, and it just makes it so hard for me to even help them. Like what's
to boil it down, it's self-employment. The self-employment part of it. I think a lot of people are very kind of apprehensive, and ignorance a bad word because it sounds like it's bad. They just lack the information, and they don't go and search it out when it comes to taxes. Some people try to cut corners and don't use a CPA, or they use their cousin who's a CPA thinking they're getting a good deal. And it's like, well, yeah, you're not paying a lot, but you're really not getting the real advice that you need.
Right.
And that's, I think, where people try to cut corners. And I tell people all the time, like, get a CPA. If you are self-employed and you are not spending time and investing time in learning how to do your taxes, do not do your taxes, because it can be a lot of repercussions. Obviously, we just hired, was it 85,000 auditors or something with the IRS? Like, if you're not doing your stuff right, you're going to get caught. The government's not super good at a lot of things, but they're pretty good about getting their money when it's owed to them. Yeah. And they will get it from you. Yeah. So when I see self-employed people, if they're using a CPA, a lot of things that I do with a lot of my clients is say, hey, when you get your draft taxes, send them to me, because I'm going to look through them and say, I'll give you a good example. Turn of this year, that was probably like May or June. So after they extended, I got the taxes, and they were expensing a ton of stuff. That's usually a big thing, is that people think, oh, I'm 1099 now, I'm going to expense everything under the moon. And what they don't realize is it's a double-edged sword. Yeah, they're not having to pay the government a lot of money, but on the same token, they're also telling the government, I didn't make a lot of money. Well, when you go to qualify for a loan,
right,
they're going to be like, well, you didn't make a lot of money. And oftentimes they'll say, well, no, look at my gross. And I'm like, well, look at your net. Like, this is what you did. And oftentimes CPAs, I know a number of them, they have a lot of volume. Unless you are a CPA who's working with like a big firm and you have a big contract, you're usually doing a lot of, if you're in the tax return world, you're doing a lot of returns. You don't have time typically to just really delve in and find out, hey, Chris, what are your goals next year? Oh, you want to buy 3 rental houses? Okay, let's pump the brakes on some of these expenses and drop. Those conversations don't happen a lot.
Mhm.
The CPAs that do are few and far between, and they're awesome. Those are the CPAs you hold on to for life. You don't want them to get too busy.
They're not taking on more clients.
No, those are the ones you want. But the thing is they don't ask the CPAs don't ask the questions, and the borrowers don't know to ask the questions. And they're just like, oh, well, I don't want to pay a lot of taxes. So what I try to do is say, hey, give me a copy of your tax returns. Let me look at them. And on this particular one that we did earlier this year, he had gotten a vehicle and they expensed it, just full on expensed it because it was a heavy, whatever, one of the farm vehicle code or whatever it was, expensed the whole thing. And we got the CPA on the phone and the borrower. And I basically was like, hey, if you expense this whole thing, he will not qualify. And he's in a position where he's using 2 years of tax returns. So it's actually going to affect him for not just this year, but the subsequent year.
Mm-hmm.
So I said, hey, is there a world where we can depreciate this instead? And the CPA was like, yeah, that shouldn't be a problem at all. Depreciated it. And the difference is when I qualify someone, I can add depreciation back in and it doesn't hurt them.
Mm.
Whereas an expense, you can't. Your hands are kind of tied, at least when it comes to something like that.
Yeah.
That's one thing that I see a lot where it's like, if I can review the taxes and give you any sort of insight, or again, if you have rentals and some of these investors have multiple rentals, I like to look at them and say, hey, sometimes it's glaring. Like, why didn't you write off insurance on any of these properties?
Mm-hmm.
And they don't have they don't know. And they go back to the CPA and they're like, oh yeah, I guess we missed it. And it's like, okay, we can amend them, which is going to cost money, take time, do all this other kind of stuff. Or, hey, let's catch it on the next time. Well, that's great, but it didn't help. It hurt the tax person. So a lot of people I work with, they're like, well, he's already seen all my stuff, right? It's like, I've already seen him with the pants down. It's like, let's just keep showing them. So it doesn't, usually they're pretty cool with like, oh yeah, take a look at my taxes again. You've already seen everything. And it's kind of nice to have a second opinion from someone who's not in it. And I'm not getting paid to look at them. I'm just looking at it and like, hey, they just missed this. Make sure you ask your CPA about this or ask them about that. And that's been probably a really big thing that I think has helped set some of these investors I work with, because some of them have come from, they have a primary residence and we did a cash out refi. They took that money, bought one investment, and now they're on like 4 or 5.
Right.
And that's not by coincidence that they get to that point. You have to, if you're going to go the conventional loan route, you have to have some game plan on how you're going to snowball, and setting up your taxes and doing that properly is a really big part of it.
Do you see more investors do like the conventional loans, or do you see more of them do like, the DSCR where they don't have, the debt service coverage ratio where they don't have to worry about all the tax stuff? I mean, what do you see most?
So I will push people to conventional.
Yeah.
The thing is you're only going to get 10 agency loans. That's it.
Right.
Per person. So I talk, if I talk to like a married couple, I'm like, hey, y'all both make money? Great. How can we do 10 loans and 10 loans? Because once you hit those loans, then you don't have an option to get a conventional loan anymore. Mm-hmm. It's gone. Unless you want to bundle bundle 8 properties into a commercial loan, and then it frees up those slots again. So I will push people to conventional for a number of reasons. Yes, it is more work. Mm-hmm. It's more paperwork. You have to kind of have your stuff together to be able to do them. If you have terrible credit and you're doing your own taxes and it's a hot mess, it's going to be really tough. And that's going to be one of those situations where it's like, you have to go DSCR. Yeah. Because I can't turn in these taxes. It's a crime. Like, these are bad. It's like, you don't even have numbers that make sense here. That's kind of out of necessity. I would say for me, I'm pushing people to DSCR as a last resort.
Right.
Because again, if you've done the hard work to have decent credit and you've done the hard work to have stable income, or at least showing that, take advantage of conventional loan. They're going to be cheaper and your interest rates are better. And they're 30-year fixed with no prepayment penalties.
Right.
The thing is on DSCR loans, which you don't really hear a lot about it, is that they almost all have prepayment penalties.
Yeah. 3 years, 5 years.
3, 5. Some of them step down. Some of them are flat percents on your principal balance.
Yeah.
And in a market like now, it wasn't as bad when rates were kind of low and just stabilized, right? It's not that big of a deal. But right now, when we're in a climate where rates are going up and staying high, we all think that the rates are going to drop down. So why would you put yourself in a 5-year prepayment penalty loan?
Right.
Like it's harder to swallow. So usually right now it's kind of out of necessity. And again, I'm much more of an advocate now of getting the property and dealing with the refinance later if you have to, because getting the asset's the hardest part.
Yep.
So if you can find an amazing home, do it. I don't care what the interest rates are at the time. Again, as an investor, if it cash flows or gosh, even if it's neutral almost, rates will go down. You'll refinance, call it a day. But again, same point. If that's your game plan, pumping everything DSCR when you could go conventional doesn't make sense to me, because you can refi it conventional,
anytime.
Yeah, I mean, usually it's like
I was going to ask, seasoning period or anything like that?
I mean, 6 months is a very common. You'll hear 6 months, don't refinance before 6 months. It's usually because the lenders will try to claw back commissions and everything back from everyone if it's within 6 months.
Gotcha.
So yeah, we kind of tell people, at the 6, and that doesn't mean you have to wait 6 months. You could start on month 5 and then close on month 6, day 1.
Yeah.
That's a lot of all the seasoning things you hear, like you'll hear about like doing cash outs and the 6-month seasoning and stuff like that. That's the same thing. You can start that process earlier and then just fund on month 6, day 1.
Gotcha.
And that's probably the other biggest problem I see with, I'll call them seasoned investors, is that.
Yeah.
The whole cash out before the 6-month business and how they structure hard money loans and stuff like that. That's probably the first one. Was the problem with like newer investors who are trying to figure out their tax returns and to be in a position to purchase. But the seasoned ones who have gotten that under their belt and they're trying to now become investors, where they're going to try to get around that, and they start getting more creative with like BRRRRs and stuff. That's where their problem runs in, is that they don't know how to set up the hard money right. Yeah. And they have to hold a property longer than they are, or all that kind of stuff. But that's probably the second one that investors mess up on.
They mess it up on the cash out refinance part.
Yeah, I mean, because a lot of people will like buy a property and then they know, oh, it's going to take $60,000 in rehab, and they think, okay, well, I'll put that $60,000 in my own money in there, and then I'm going to refinance this thing, get all my money back out, and then walk away. It's like, well, that's not how it works. That now you've turned that loan into a cash out, opposed to a rate and term, and rate and term will always be better than a cash out refi.
Right.
So you kind of want to structure the hard money loan differently, so that you don't have to take that $60K of rehab money out of your own pocket. You want to use it from the hard money lender.
Right.
That way it's an initial lien, and you can do a rate term within 6 months. You can do it day 2 if you want it. Day 1, it doesn't matter.
That way you're not out of pocket for anything.
Yeah, and you get to do a more, give you an example. If you did a DSCR cash out refi is much more expensive and costly than a rate and term. So why do it so that you're setting yourself up to do a cash out when you could have just tweaked 2 things or whatever and made it a rate term? Yeah. And that's probably, again, of all the people I see who are buying from wholesale and they're doing hard money, I'll bet you, gosh, at least 1 in 5, maybe less than that, are doing it correctly.
Yeah.
And then they get 3 or 4 deep. Someone finally tells them, hey, you need to change the way you do this. And then it clicks and they follow that process going forward. But oftentimes it's they've done a few the incorrect way. And it's just harder. It's one of those things, like it's everything in real estate investing. It's you kind of just keep messing up until someone tells you you're doing it right.
You don't know till you know.
Exactly. And the thing is no one tells you things.
Yeah.
I mean, it just is. Like, you'll work with a realtor for multiple times, and they'll just keep, found a house, but they don't go past finding you the house, which is great. But this is why it was like, when you work with someone, we'd always talk about in real estate, like, you got to build your team. And the reason that's important is because you could have the best realtor in the world that finds you the best deals in the world. But if you don't know how to finance and set that up correctly on the lending side or the financing side, I mean, the house is great, but you're going to end up losing money. It's not going to be as efficient. Whereas if you had someone you could talk to in that vein who was like, all right, they know what they're doing here.
Yeah.
Boom. Same thing with title. Title's another one that's like totally overlooked, and they just think, oh, any title company's great. Not the case. It's like, once you've had a problem with title, now all of a sudden it's on your radar and you're like, all right, I got to pay attention to title now. And that's usually how we are as humans, right? Like, we don't care about something until we get slapped by it. And then all of a sudden we're like, oh, I need to pay attention to that.
Yeah.
So that's where a lot of people kind of learn as they go as investors, is they start with a realtor, they start with a lender, they start with title, and they don't make changes really until they realize, oh, there's
a better
more
way.
knowledge. Yeah, there's more efficient ways to do this. And then once they find that out, the whole thing opens up, and it makes everything easier to snowball, to assess deals, et cetera.
Yeah, there's tons of knowledge you can read and stuff, but it's not the same as getting your ass whooped over and over. And you're like, man, this is just not working out.
Well, the problem with reading stuff, I mean, it's like with every industry I've seen and been a part of, or any sport. It's like what they tell you and what reality is always far off. And there's a lot of idiots. I mean, let's be clear.
Yeah.
There's a lot of people who will say, "Oh yeah, you can do this or you can do that," and I'm like, no. Or I'll be told a lot of, they'll be like, "Yeah, my other lender said we can't do this, so I didn't even waste my time on that." Now, short of being like, well, that he didn't know what he was talking about. That kind of stuff happens. And that's why it makes it very difficult for someone who's looking in to try to figure out, hey, how do I do this? If you go online and Google like real estate investing newbie or how to become a real estate investor, I mean, it is just thousands of people.
Wholesale.
It's wholesale. It's wraps. It's subject to. It's, hey, join my course. I'll show you how to do this. And it's like, well, do I do that? Do I look at this? It's very difficult.
It's too much. Yeah. It's way too much. It's like, it's like a dog when you throw, 2 balls and they're like, I had someone ask me, I had a good friend of mine ask me the other day, he's like, do you guys go to a lot of seminars? I was like, I really don't go to a whole lot anymore. It's not because I don't enjoy, you can network and meet all sorts of, I like that part, but I was like, sometimes, man, you'll show up and that's with any business seminar. You show up, next thing you know, you've got this new idea and you left and you're like, honey, we're going to do this now. And now you're off course.
Yeah.
And you're like, why did I do that? Versus just, that's one of the reasons why we don't go to meetups and stuff for always the information. It's more for meeting people.
Yeah.
Because like you said, it's too much. Go to wholesale, do subject to, do this, do that. And then you're like, it's trying to get through the clutter of what you should do and what you get good at. And for you, it's been a certain area, and that's why you've succeeded. And I think that's why a lot of people succeed is they get good at one area and they don't really veer from that as much.
I think I have trust issues also. Like, I'm like, I don't know about that. Let me go get a license. Let me go look behind the curtain, because I mean, that's,
I don't want to wait on people.
No, I mean, the very first thing that happened with insurance is I would have to call my insurance broker at the time and say, hey, it's been a couple of years. Can you shop all my policies for me? Mm-hmm. And it would just be like, sure.
There's a whole bunch of them.
Like it was just like reluctant. And I think at that time it was like 7 properties or something.
Yeah.
And he was just like reluctant. It was just like always like pulling teeth to get it. And I was like, you know what?
I'm just going to do this myself.
That was always gnawing at me. But then it was like the whole passive income stuff. And like again, it's in the Venn diagram. I don't have to veer too far off. I was like, all right, I'm going to just do this. And now I can just shop my own policies.
Yeah.
Like whatever I want. If I'm like, you know what? My cash flow, like they went up on taxes. My cash flow isn't good. Let me shop this insurance policy, see if I can get this cheaper. And it's like, you always can. It's like switching. There's so many of them. It's like, well, these guys will give me a better deal for a year. I'll take it. So it got to that point, but it really was out of necessity where it's just like, I can't differentiate the BS from truth until I went and either met someone that I was like, all right, he or she knows what they're talking about. I can trust what they're saying and I don't need to go get a license or do a deep dive into how to do it. I always recommend it, and I tell people all the time, hey, I'm going to give you a bunch of information. Go fact check it. Like, if you don't believe, I want you to, because I want at the end of the day for you to get 3 or 4 facts deep and be like, all right, he knows what he's talking about. I don't need to go check the rest of this forever.
Yeah.
And that's kind of what it boils down to is I would go in these other industries and talk to people and I'd be like, all right, I'm on board. Then they'd say something. I'm like, I know that's pretty sure that's not true. And I'd go and look it up and I'm like, no, they were totally wrong. And then when I'd bring it to their attention, be like, hey, I question about what you said. And they'd be like, oh no, that's fact or something. Or they'd want to contest it. And I'm like, all right, maybe not. Maybe this isn't a good fit. Because the people I've met in industries that are really good at what they do, they'll be the first ones to admit, I don't know everything.
Yeah.
At all. If you ever meet anyone that's like, I know everything, they don't. And I'd stay away. But the ones who are like, hey, I don't know, but you know what I am good at? I'm good at finding out the answer. And those are the people across the board, whether it's, you're doing repairs in your home. You're like, hey, can you do this? No, tile work's not my thing. But I know a guy that can. Let me introduce you to him. Those are the guys I want to work with, not the guys that say, oh, I can do everything.
Yeah.
Because you just can't, So it's about building that team is really important and making sure that they know what they're doing.
Yeah.
If you can, you're not going to be the best at it.
Right. Yeah.
We went through that on a contractor
Yeah, we
that
did.
was doing our house, and we just kind of were like, let's get it done. And yeah, we were like, man, this is some of his work. We're like, this sucks.
And it's funny, you think it parallels. Like the one that I think is most just stands out the most is a painter versus sheetrocker. Every painter will say they can do sheetrock, and that's not the case. They think because it's so similar that it's like, oh, yeah, I can do that. And then they paint it, and you're like, I can literally still see where that door was. Like, it's not a thing. But then when you meet a guy who was a sheetrocker, like, that is what they do. Yeah. You can't see anything. Now, their painting might not be the best, but tell you what, they know how to texture, and they know how to do that sheetrock repair. And it's one of those things where every painter you talk to, can you do sheetrock repair? Oh, yeah, no problem. And then you find out, no, you can't. Yeah. It's one of those, it's just kind of how it is. And you don't know until it's done. And then you're like, all right.
He must have been reading our minds because that's what it was. The sheetrock guy couldn't paint.
Yeah.
We're like, damn. But we really needed to get it done.
Yeah.
We're like, we this is in our house. We were living in the living room for a year, and we're like,
Over a year.
Okay, man, look, we don't want to just, you and your buddy figure this out and just paint it. And you can still see little areas where you're like,
yeah.
I walk by today. And they did the house looks beautiful, but it's the paint part.
Yeah.
When it's your own place. If it was a rental, I wouldn't have been as big a deal on, but like, I still see some spots where I'm like, a painter would have covered that up, maybe put a little caulk and, made it all nice.
Oh, everyone that comes to your house will never even see it.
They'll never
see
it.
But every time you walk by it, it's like, I see that.
I know.
And yeah, it's one of those things.
It's funny that you said that you're like, hey, the reason I got these licenses is because, no trust issues. And I can relate to that. You don't want to wait on people. You don't want to you just like, why not? Misty and I've had this discussion. She'll laugh because part of me wants to go back to school and get a law degree and start my own lawyer. I know that's a horrible idea. Don't be your own client, but I'm like, I'm just tired of waiting around. Every lawyer we've talked to, they all said the same stuff. They're like, we had to figure this out.
Yeah.
I'm like, so what's the difference between me and the degree and the lawyer? Not saying that they don't have any value. I was like, well, hell, if I just don't have to wait on anybody, I just do my own law. That's it. I'll just do real estate law and some title work and have, just so I can have it.
And there's no one to blame. I mean, if you screw up,
it's me.
It's you. Well, Misty might blame you, but that's what I tell the people I work with. I'm like, hey, something goes wrong, like who to look to.
Yeah.
Like it's me, and I'm fine with that. I mean, if I get to own it, then the good and the bad with that, right? I've done the same thing. At one time, I was like, you know what? I'm tired of these appraisers. I'm gonna get my appraisal license, and then I found out what it takes to get that, and I was like, nope. I'll pass on that for the 2-year, not making money part of it. And then I was like, well, CPAs. I'm like, man, it's so tough to find a good CPA. And you can do your own tax. Well, I don't think you can, actually. I think you have to have someone else do it. But you can do them and then give them to someone else to, knock out. But I was like, man, that'd be great to do. And then you're like, oh, you got to go to school a lot more and do tests.
That's what stops me. And the worst part for me is I dropped out of high school at 17. So I have to go and completely start from the bottom as far as college and stuff. So I'd have so much extra, crap work I'd have to go through. And my algebra sucked. So I'm like, man, I don't know if I really want to go through all that.
Just be that guy. What was that show, Suits or something? Be the guy that doesn't have a degree and just practice law.
I don't think I've seen that.
It's probably not advisable.
It's Suits?
Yeah, it's like a TV show. I
have to look that up.
I have to look that up. Suits.
But I mean, again, it's like you don't have to go and get a degree at something. That's the good and bad of online, right? You can go and find, you can be anything. I mean, I learned how to do backsplash at my house one time, literally just looking at YouTube videos and figuring it out. It looked okay. I'd put it in a rental. But it was like, I had zero skill with this. I couldn't even tell you what the tools were. And then by the time I was done with it, it was like, oh, not that bad. And that was all just from going online. So it's like people they go online and they just read stuff and they think, oh yeah, this is it. And they don't really dig deeper and say, well, let's go to multiple different sources. And it's like, you go to the first one and it says one thing, but then you go to 3 others and they say that one's wrong. Well, chances are that one's wrong and these other ones are right. But you wouldn't have ever gotten that knowledge if you wouldn't have gone past the first little nugget. Yeah. So it's like, again, with lawyers, it's like, well, I set up a Series LLC. I had some lawyers that were like, oh no, those aren't real popular. We don't really do those. So I would have left that thinking, oh, okay, well, I guess that's a bad idea. But then the more digging I did online on my own, and then I talked to other, I go and talk to other lawyers, and they're like, oh yeah, this is a perfectly viable thing. It's very popular. It's great. Here's the benefits. And I was like, it's exactly what I was reading. But if I would have stopped with the one attorney, it would have been like, all right, I'm done with that. And I think that's where people kind of, they hit a wall, or they think they hit a wall, and they just stop.
Yeah.
And it's like, again, with investing, it's like they do one deal and it doesn't work well. And they think, oh, well, all investing's terrible. Well, it's like, well, no, you just didn't do a good job. Yeah. Or that wasn't a good deal. You should have passed on it. And it was like, if you just kept going and just doing it, it'd work out. But you got to fail sometimes, and you got to learn to look past your initial no and all that kind of stuff. But yeah.
Well, that's why you fit with jiu-jitsu too, because that's what jiu-jitsu is.
Man, right? Jiu-jitsu is just a ton of...
It's fail every day. You walk out. Yeah, you're like, it's a puzzle. You walk out you have a little less self-esteem. You're like, oh, today sucked, man. I don't know what I'm doing. And then you go back, you're like, I'll try it again. Yeah. That's investing. That's business. That's all of it.
That's the one thing in jiu-jitsu is like those little victories, because you lose all the time, right? I mean,
all day long.
Anyone who's trained any martial arts, especially jiu-jitsu, very punishing. If you gauge your success by, oh, if I tapped them, you will be terrible. You'll be terribly miserable, because you do not submit people all the time, and you have to look for those. When I first started, I remember this guy would always he'd take my back, so he'd get on my back and he would choke me. He'd come from gift wrap, but he would end up choking me, and I was like, this is terrible. And it was like his one move, and I think he was trying to show me as well. He was a color belt at the time, and I was white, and he just would do this over and over. And eventually I was like, all right, I need to figure out where he's starting to get this and then try to stop it. And eventually it got to a point where now he could still gift wrap but not take my back. And then it got to a point where now he couldn't gift wrap. And what it did is it forced me to, I didn't sit around and ask, oh, you need to change you need to stop submitting me that way and try something different. No, it was like, go ahead and keep doing this. I'll figure out how to stop this. And to me, it was like learning those little victories. And every time I left the gym, it was like, all right, I lasted a little bit longer, or he didn't get this, or it's just those very small victories. And then eventually when you step back and look, huge victory now he couldn't do it. And it's great for him too, because now he had to change his game. So it kind of has that force evolution. But those little wins, if you apply, I always tell people all the time, jiu-jitsu is very parallels to life in many, many different ways.
Absolutely.
And those little victories, if you look at everything like, oh, I got this house and it was just the unicorn, and okay, great. That's one-offs. But usually it's, hey, I got this house. It costed more on the rehab than I thought it would be. So, how did I address that on the next house? Or how did I use that to get better on the next ones? It didn't mean I just stopped and was like, oh, this house didn't go how I thought. I'm never going to do this again. It's like, how do I make these little tweaks so that by the time I get to the 4th, 7th, 10th, now it's like clockwork. I know what I'm looking for. I know what I'm avoiding and all that kind of stuff. But yeah, if
you can make it through jiu-jitsu, I've always thought you can make it through anything in life, because it doesn't stop. I mean, whether it's white, blue, purple, brown, black, or beyond. I mean, as long as I've been doing it, I'm still learning and screwing up and making mistakes. I mean, you have to. So, but I agree. It parallels very well with business. It parallels very well with life. It's the same concepts. It's just getting through that. So
difference is you're getting beat up while you do it.
Exactly.
It's like you make a wrong move in the house, you just get knocked over and choked. It's like, that's a little different. But it just hits your pocketbook. It costs you money. But.
It's a different feel for sure. Man, I want to ask you about. So you mentioned this last time I got to see you was 0% interest on a property that you had bought.
Yeah,
so
you
kind of go through that with us. Tell us a little bit how that's something I've only heard a few people that there's only people I know that have done that, and every story is different. So I'm curious to hear your story.
So this one actually, a buddy of mine he's a hustler for sure. He'll go, and I tell people all the time, like, if you need to find someone to find you properties, talk to tradesmen, roofers, people who are doing rehabs, plumbers, because these are the guys that are going into people's homes and assessing damage. And they're like, hey, there's a lot of work in here. And sometimes they don't have the money to fix it. Oh, you don't? I got a guy who might be interested in buying this house. And they have no shame. I mean, people just lost their roof, their house is flooded. Who are the people knocking on your door? It's a roofer.
Yeah.
They don't care what's happening. Screaming baby. They're like, oh, yeah, we're in your neighborhood.
It's fast, too, man. It's so damn fast.
I already got my ladder up.
I got to say this. The tornado hit us that one year. Dude, there were so many roofers. It was like, can we at least process what just happened?
They're already putting the sign in your yard.
Yeah. and they're always pointing. They're like, oh, yeah, we did your neighbor's house over. And the point is like a vague direction. They're like, yeah, we did your neighbor's over here. And you're
Absolutely.
like, wait, what neighbor?
And you Google their business and it just got started last week.
Yeah, they just made it.
We had that. One of them, and then they went right out of business as soon as the tornado, because the trees are pulled up, cars are all screwed up. I mean, windows and dude. And then the one we used, they went out of business like once the tornado damage was done. They're like, no more.
Yeah.
Shift the gears.
It's crazy. And then we thought, okay, roofers are the only ones that do this, right? And then we had that ice storm.
Yeah.
And it was like, where'd the plumbers took a page out of the roofer? I mean, the plumbers knocking on your door. Just wanted to check if you had any broken pipes.
The mitigation people.
And of course their pricing all of a sudden was a lot more expensive. Yeah. I get it. Supply and demand. I mean, roofers or plumbers don't get this kind of opportunity often. So they were taking advantage. But it's those tradesmen. Those guys are awesome to go and talk to. And if they know, hey, Trevor wants to buy a house that might need work. He has ways, they can do hard money. They can do this, whatever to fix it. Mm-hmm. They'll send you deals. And again, it's pretty easy to do referral out and say, hey, you know what? You find me this deal. Guess who's doing the roof? Yeah. Like they're totally fine with it. So they're advocates for you and it helps them as well. So, sourcing homes, that can be a great way to do it. And again, it's just all relationship building and saying, hey, letting people know that's what you want. So it kind of starts there. But one of my buddies, he's a roofer / he's the kind of guy like me who has like 9 different jobs. It's like everywhere he goes, it's like, I wonder if this could be a business. He actually sourced this one and talked to the lady first. And this lady, I believe it was her husband had died. He had the portfolio. And it's in like 4 different states. And they still have other homes to this day, which we're hoping we can snag for similar situations because she was totally cool with it. But she didn't want anything to do with the houses. And that's usually where almost all owner finance deals start. They start with they have pretty good equity in the home. So usually they're older. And it usually was a rental or they're leaving their primary home to go somewhere else, live with family or senior living or something of that nature. Well, in this scenario, it was the husband ran the rentals and now he's dead. And now she's like, I don't know how to do this, which is usually a problem, by the way, for married couples. My wife already yells at me because she feels like if I die, she's like, I don't even know what to do. And I'm like, she wants me to write like this book.
Paying attention.
No, she wants me to write a big book and like explain everything. And I go, the second I write that, I'm going to die. So I'm like,
I promise you won't. You won't.
See, I got to get your book. I'll figure it out. But
just tell her if it happens. Just tell her to call us, and we'll own her finance because she doesn't want anything to do with them.
See, I like the angle already. Like,
problem solved.
Putting these in. And she actually, at the time, this home was on the MLS, and this is why I tell people all the time as well. A lot of people think you can't find homes if they're on the MLS. Right. Like once they hit there, once a realtor gets their teeth in there, there's nothing. Absolutely not true. I mean, after this, I'll tell you about another deal that we literally helped a guy buy a house in Garland straight off the MLS. And it cash flows better than, I'll bet you 2/3 of the deals that I'm seeing that people bring in to get refinanced. It's just straight off the MLS. Nothing crazy about it. Yeah. But this particular one was on the MLS and got basically negotiated where initially it was going to be owner financed. She wanted... at the time, and it's a fine line. It's a lot of negotiating where it's like, hey, do you want money up front? Do you not want money up front? What are your needs and et cetera? Mm-hmm. And she had a small loan on there. She didn't know she had a loan on there, which is always interesting to think you don't know those sort of things. But hey, if you're not in it, you're not in it. It's just like, I don't know. I own a house.
I have a question. So it was on the MLS. Was it advertised as owner finance?
No.
Okay. So
it was just
you had
for
to
sale.
approach that.
And that's the other thing now is you're seeing all these houses on the market. 60, 90. It's cooled since June, middle of June. The market really took a quick turn, and you're starting to see homes sitting. Well, this one had sat for a little bit, and basically it was just approached. And my friend Andre actually was talking to her, and she essentially was like, "Yeah, 0% interest. That sounds fine. Owner financed." And the way it was originally structured was a 5-year balloon, and that's common in kind of owner financing. And then you can negotiate later, and they're usually okay with it because a lot of people have never done it before.
Yeah.
And they think, oh, you want to buy my house and I'm the bank? Okay. So what's the benefit? And you're like, well, you're going to be able, when you're older, it's like you don't need all that money sometimes because maybe you have retirement, you're not spending stuff, whatever the case may be.
Don't want to take the tax hit.
She just wanted steady income coming in.
Well, what you just said, the 5 years. See, most people don't think that. They're not like, oh, 5 year.
They're like, I don't want to sit on it for 30 years and getting my payments.
Yeah.
But
like,
during that 5 years, it also builds that history with that person. It makes them more comfortable. Yeah, they're paying on time. I've never had a problem.
Yeah.
This is easy money.
This is easy. I get used to getting this money every month.
Yeah, I don't want it to stop.
Yeah, and they can usually and they can qualify. They can use that money to go buy something because it's stable income coming in.
Yep.
Yeah, they get used to it, and it's like, okay, this isn't bad. And sometimes adding those little caveats is the difference between them being like, to your point, 30 years, but to be like, hey, we'll do a 5-year or a 10-year, and then we'll pay you everything that's due afterwards. And the key is when you're doing the owner finance is, like, pretend you're selling a house and you're trying to sell it for $200, but it is not moving. And your realtor, of course, the realtor's kind of like, well, the market's changed.
Yeah.
Have you thought maybe we can bring it down to 189? And I think we should get movement. And you're like, no, 200 is what I'm getting. And it doesn't move. And then someone comes up and says, hey, not only will I pay maybe I'll pay you 205, a little bit more, but here's what I want in return.
Right.
And that's oftentimes how those things can kind of set up. And you're looking at it and you're like, well, I don't need the money. Again, these are all circumstantial. The seller has to be in that spot, but it's like, hey, maybe I don't need the money right now in full. I'm not going to go buy another home, or they have enough money that they've already bought in another home, and this is like a rental on the side. They're like, okay, I want to sell it. I can get stable money coming in, and I know I'm going to get what I want or even better, and it's going to be down the line, but at least I'm getting it. Whereas right now, when you do, and we're like, oh, well, we'll pay all the closing costs and everything, where someone else will come in and say, they're going to lowball you and ask for repairs, because usually this house needed repairs as well. It needed about $50,000 in repairs, $40,000, and that was kind of the selling point as well. So when you're looking, I always tell people, when you're looking at homes, you don't want a really nice updated house, because someone's paying for those updates, and it's usually the buyer in most scenarios, because the seller always is. I mean, we've always tried to sell something. It's like, if I put $10 extra into this, I want to get at least $10. I want to break even.
Right.
And the thing is I don't know if you knew how to buy, you might have bought this granite at Home Depot instead of going to the Rock Yard, and you paid twice as much. I don't want to pay. I mean, I could have done this for half the price, and it would have been the one I wanted.
Yeah.
So it's like, you try to find those beat up ones, but in that scenario, that structure is how we basically got it. And then we ran it through, and I know a lot of people who are more apprehensive about it don't understand, like, well, how do I just send her money every month? Well, there's companies, like we use August REI, and they're one of the bigger players in terms of like the servicing. And we just literally pay them each month, and then they transfer the money to her. Yeah. And they handle all that. They handle escrow, because we only it was $15,000 down on the house. That was kind of a trade-off. It was like that $15,000 will help pay off the loan that you had on there that you didn't know. Yep. And now we take over and just pay her. And I still have her number, and I'll text her. And again, I'm talking to her about her other homes. She has like 2 in Florida and 1 in like Atlanta. And like, hey, when you're ready to move on those, let me know. I don't care if they're in another state. At those terms, it's like,
it doesn't
all day long. And she's obviously okay with it. And again, like to your point, Missy, like if she's comfortable, and that's the biggest risk, right? If I'm like, hey, I'm going to pay you each month. I know we've never met, but
I promise I'll pay.
And they hear a lot of that. It's a lot of skepticism. But then when they see it coming in like clockwork, and I'm the one who's setting up the servicing, and it's very professional. They have like a website you can log in, and portals, and they do all the tax stuff. For her, it's like, oh, this is easy. I just get money deposited into my bank each month. I don't have to worry about the house and updates and rent it. None of that. And the thing is we turned around and got it rented to a guy who's doing Airbnb arbitrage, which, if people aren't familiar with that, basically you rent the home to someone who is going to then Airbnb your rental.
Yep.
And
I see that a lot in the groups.
It's really good. I'm not a real big short-term rental. Granted, I say that, and we're building a cabin up in Broken Bow right now that's enormous, and that'll be short-term rental. But this one, it's kind of in Denton, kind of a local house, and they're getting that one to basically rent out. So we got $2,300 for it on a 2-year lease.
Mm-hmm.
The thing is they're usually longer leases because once they do all that legwork of getting reviews, they don't want to lose the house.
Yeah.
And they'll pay above market because it's a little more risk for me, at least from their position. But from my position, I'm like, this house is going to get cleaned once a week or as often as it's going to get cleaned all the time.
Yeah.
The maintenance is going to be really well kept. They're going to keep it in a very high standard. And I'm like, that's better than most tenants do.
Are they responsible for the maintenance?
Yeah. Other than the main major ones,
Yeah.
you know, like your foundation or hot water heater or something. But yeah, generally, like if a tenant kicks a hole in the wall, then yeah, our tenant is going to be responsible, but he's going to go after, obviously, the guests to go and do it. But yeah, it's not too bad. I get named on their insurance policy, and it's not as high of a risk as a lot of people will think. But again, when you're looking at a 2-year lease above market, and above market in today's market is pretty solid because rent's pretty great right now. And, that's an example of one that just worked out where it went from kind of an owner finance to getting this long-term lease on there. And now it's kind of, we wash our hands of it and it's just auto. I mean, that was going to be very low maintenance because we did a lot of stuff in there to begin with.
Yeah. What did you find? So as you're talking, because some of these on the MLS, like, do you find that the realtor is a big stopping point sometimes? And I say that because most realtors don't necessarily think like investors.
Yeah.
So, or creatively, do you find that to be a stopping point sometimes when you're going in on some of these deals that are owner finance or whatnot?
Depends how long it's been on the market.
Gotcha.
If it's within a week, a realtor's on the seller side.
Mm-hmm.
It's not really it's the realtor and the seller. I mean, why would they do it if they think they're going to get what they want?
Yeah.
And be done in 30 days. But when you're 60 days, 80 days in, now it's a different thing. Now realtors are just like, anyone want this house? Bueller. Like, it's like, anyone, can I get feedback? What do I got to do? Like, they just want to sell it. And the odd thing is, in the real estate world, people always, it was worse when it was like COVID, when things were really crazy and the homes were selling, way above, and it was just a fire sale. It was just crazy out there. Right now, it's a lot more in line where everyone has the same goal.
Mm-hmm.
And that wasn't as much the case sometimes when, sellers agents were trying to just get as much as possible. And the buyers felt kind of, ransom. They couldn't do a lot. It was like, I got to offer way over. I can't ask for any repairs. I can't do anything.
Can't even get an option period.
Yeah. Like, it's like, they're asking for no option or, $10,000 option money. Like, it's just like, it was very much not an even playing field. But now that it's become more of an even playing field, which is really, I think, a more healthy market to begin with.
Should be.
Yeah.
You do have a lot more conversation. I could call an agent right now and just be like, hey, we're looking at this house. We're kind of interested. I see this or that. Is your seller aware of any of that? Are they willing to do any of that kind of stuff? And usually the response is met with, oh yeah, hey, thanks for calling. If we find something, we absolutely, we want to make sure if we can fix it and make the deal work, we'll make it happen. Like, just that dialogue happens. Before it was like, you can just send your offer to my assistant. Like it was just like,
yeah,
take it or leave it.
Because they knew that there's going to be someone who's just going to say, hey, I'll buy this as is, no option period, or cash or whatever. And now it's like, no, we have to have a little more dialogue. So right now, it's funny. A lot of people did not do investing when the housing market was crazy, right? For the last 2.5 years. They didn't because they were like, well, we're going to wait for the market to cool. Well, then the market cooled. But now those are the same people who are like, well, now I got to wait for the interest rates to go down.
Yeah.
And it's like, they'll never.
They just won't.
There just won't be in their mind the unicorn time or the unicorn home. It just won't happen. And if they sit around and wait, these are the same people who are going to look back 10 years and be like, and I didn't buy anything. I don't know why I didn't. And it's really easy for that. And again, that's another example is people don't go look on the MLS, or they don't, or realtors in general who are helping investors buy homes. They think, well, gosh, they hear about all the people. Oh, it's all wholesalers and it's this and it's that. It's like, use the MLS because there are opportunities on there for sure. I was telling you about the one this one's in Garland. And the guy who bought this was actually, he's one of my contractors that does a lot of work. I mean, he does awesome work. And he he forever had always been helping my homes, and I'd been referring him to other people. He'd always been doing all the work, but never had a rental home of his own.
I'm gonna need that contact.
Yes, he's awesome. And he wanted to do it. He just, again, his skill set was over here. He could fix he can do everything. Painting and sheetrocking is his like specialty. So he's a good example. And he'd do all this, and I'm like, man, we got to get you a rental home. Like, he had the money, got him pre-qualified, and he ended up going DSCR for him just because of his self-employment situation.
Yeah.
And even on a DSCR loan, which is notorious for having slightly higher interest rates than a conventional loan, he was able to buy a house in Garland. Now, here's another thing that people, again, overlook. It's a half duplex. And people will freak out and say, I'd never own a half of a duplex. Well, to me, a half of a duplex is a great opportunity to own a full duplex, because you go and meet your neighbor, and guess who they're calling when they want to sell it? It's going to be you, and then you're going to have both sides. Yeah. But a half duplex, I have one in North Dallas I bought off Craigslist, and I only own half of it. Still to this day, a realtor owns the other half, so I'm going to get crushed when he wants to sell it. But those half duplexes, you have to realize people are moving from apartments. Yep. And going to a half duplex is still a step in the right direction for them. Way more privacy. They get a yard. They have parking. And, he got this one in Garland. It was in a position where it was a 2-2, but it had like a second living room that could easily be turned into a bedroom. Super easy, but people didn't. I talked to the selling agent, and he was like, yeah, we just didn't have a lot of people looking at this because they didn't like that it was a 2-2 and never came out. And it was like, if they would have just went and looked at it, they would have known instantly, oh, this is a 3-2.
Yeah.
Mm-hmm.
Easy. And now he was able to get this house. We got like $6,500 in closing costs. So he had to show up with nothing, essentially. And he paid down the point because he had extra. They paid title insurance. They had a survey, but, to cover his closing costs, he basically had to use all that $6,500, had to buy the rate down so he could use it all. Showed up with just down payment on the home, and he ended up getting, at least it was like $2,200. His monthly payment, I think, it ended up like low 18. It was like 1823. So he's cash flowing almost $400.
Yeah.
And this was the only thing he put into it was equity. That's all that's all the money he put into it. And his cash on cash return, I think on that thing ended up being, it's like 14, almost 15%. And he hardly had, the woman who took it over, funny enough, was like, oh, I don't even need a third bedroom. I'm good with that other living room. So he didn't even have to do any of the conversion stuff. Yeah. So it was like, again, that was just straight off the MLS. It had been there for like 30 something days. I know it got overlooked because it was a half duplex.
Yeah.
And it was just like, sometimes you have to go look at things that it's just numbers. And that's the benefit of being an investor, is you can take all the emotion out of it when you look at a house. And that's why I try to work with realtors who are trying to help investors. They try to go in there and think like a realtor who's helping a first time home buyer.
Yeah, no, we don't care.
It's, they'll be like, oh, well,
Really?
yeah, I know it's not granite. And you're like, tenants don't care.
Yeah.
Like all day. It's not that big of a deal. Or they're like, oh, this yard's kind of tiny. And it's like, my tenants don't want to mow this lawn. It's not those sort of things. And once a realtor starts to like take that emotion out of it, and that's the thing, they're really good, which they need to be. I honestly also think I was not as good of a realtor when I was doing it, because I'm not super good with like empathy and kind of being like, oh, your children are gonna love this. And like I'm not cheerleader-ish. Like I am not.
Yeah.
I'm not building people up in that fashion. And it's very good for investing, because I don't look at it and I get worked out. It's just like, all right, matter of fact, this. Tenants don't care about that. They do. It's easier, but thank God there are realtors who do have that, because those are the best realtors, because they love their clients and they love helping them find their first home that is their dream for their family. And I look at homes and I'm much more like, all right, is it practical? Like, are we going to are the bedrooms split? Are we going to, lose certain tenant bases because of how the house lays out? I look at it more like that. And I think to me, that's kind of a release to be able to look at a house without the emotion.
Yeah.
Because anyone who's looked at homes, and people listening to this, like I went with my wife when we were looking for a house, and I loved this house. It was in Louisville on Clydesdale. Like, loved this house. And I remember her just kind of being like, kind of cool about it, like temperature wise, like, I don't really. And I was like, what's the matter? She's like, it just doesn't feel right. And I'm like, I can't there's no qualitative part to that. It was just her feeling about it was not there. And the thing is, on investment home, I don't need to have, it just doesn't
feel right.
Doesn't feel good, but the numbers look good. So we move forward there. But yeah, a lot of those homes, people, I always tell people too, they have to understand what renters are looking for. And people think they know, but rent is not the main dictator of why a renter's moving, for example, is not rent. Rent is down below. It's like at 20% of the reason. Number one is maintenance. By about, it's like 48, NAA, National Apartment Association, had a report a while back where, I forgot the percentage, but it was close to 50 was maintenance. Shortly under that was relationship. And then under that, way down low was rent.
Yeah.
So people have to understand when they're doing it, maintenance, and all two of those things are sold solely by you as a landlord. So that's why if they like you and they trust that you're going to get things fixed when they move in, you can rent that thing for anything you want. I mean, those are the two things. If you knock those out of the park in their mind, it doesn't matter what the rent is, because they're leaving somewhere where maybe they were paying less, and in their mind they're like, well, maybe I'm getting what I pay for. Or they're paying more and they're like, well, that's why I'm moving. I'm paying all this money and they're not fixing anything. Right. Or they're rude in the office, or they don't answer my calls, or whatever. Yeah. So it's like when you figure out those elements and then you start looking at a house, you're like, all right, I can maintain this. I can do this. And those are big deals. And,
or their rent is so low that they won't even say a word when something. They're like, I'm not going to call anybody.
I just don't want to cause waves.
Yeah. My rent's really low. I don't say anything.
It's tough now.
That call is going to cost me $100 a month.
They're going to be like, wait, I have a tenant? Oh, yeah, I better be increasing this.
100. It's going to cost more than 100, man. We've seen a few. Misty had one of those. You took over 2 different properties for one of your clients, and the rent was really low, and they just didn't like to say anything. Yeah. And then they, for that exact reason, they're like, we won't say anything. But when she took over, she was brought in to clean it up. And then when she did, they were like, okay, we got this problem and we got that problem because the rent was going up.
Yeah.
The rent's going up. So it's time. Like, yeah, we experienced that. We did that on one of the properties that it was low. One of our own, the rent was low, really low. And then what was it? Every time
I did a step-up lease. And so every time it went up, there was a problem.
Yeah. Always.
And I'm like,
And it's always like, this has been leaking for months.
Yes.
You're like, well, why didn't I hear about it months ago? Like, what is... Yeah.
So I want to ask this, your approach to the owner finance, because some people, I know we've done some owner finance for ourselves, but some people step up and they say, some people say, don't go and approach owner finance immediately, talk to them and then approach it later. Or do you just go right out the gate? And, I know when we were going after owner finance, we were just like, we went straight to the gate and, until we got the one, like, okay, cool. That works.
I think any method works.
Yeah.
In my opinion, it's kind of like with everything. It's like the right person, it doesn't matter what approach you take. If it's our only option, they're taking it. Yeah. But I'm much more, you can kind of, whatever the saying is, like you can be the hammer if you want right out of the gate. But it's like that will turn people off.
Yeah.
Because they kind of feel, again, I have no rapport with this person. I don't know who they are. This is not normal. Most likely the realtor they're using or their friend who used to be a realtor. Like they don't understand it. And usually that leads to, let's stay away from it. Which, I mean, I do that in my life all the time, right? I get a flyer in the mail. I'm like, I don't know who this is. Like garbage. Yeah. Like that kind of stuff happens. So I think it's less about what you offer them initially and more along the lines of, can we build any kind of rapport organically? And then from there, explore options. Because again, when they realize, hey, this guy's not trying to screw me. He's trying to win, which makes sense. But he also wants me to win. And when you have that kind of relationship, that helps drastically.
Yeah.
And sometimes that can be difficult to do. And that's probably the downside of having a realtor involved is that now you have a gatekeeper.
Right.
Right. Like if you call someone, you're not going to get them. You're going to get the realtor. And the realtor, because again, the realtor, they want to keep they have the fiduciary responsibility. They want to keep their client's business or their client's, position at heart and in the forefront. They want to take care of them no matter what. And also they want to get paid.
Yep.
Like there is an element of commission there. They want to get paid. They don't want to be cut out.
That's threatened.
Yeah, and they feel like, a lot of them use buyer's reps, but there's a lot that I know that don't. A lot of new realtors that I work with and have experienced don't use buyer's reps. And some of your really old school, like very confident realtors, they also don't use them because they kind of feel like, maybe on the sale side they use them, but on the buy side they kind of feel like, hey, if they don't want to work with me, then that's fine. I'll let them go. You don't want to keep them hostage.
Yeah.
And so those things, they get used, and you don't know if there is one in place or not. So when you go there and you talk to the realtor, they gatekeep, and it can be kind of tough. But again, once a realtor kind of realizes, hey, this guy, again, he wants to help my client out, let me talk with them, that can kind of loosen things up. And if you get the other realtor on your side, so to say, like understanding what you're doing, way better shot of making it happen.
A lot of realtors don't understand it.
So you have to educate.
That's the hard part.
Yep.
They're like, what?
Yep.
I know we had one listing you had where you tried to explain to the client someone had offered to put $75,000.
You probably could have closed that deal.
Yeah. We didn't know you at the time, man. We would have been like, here. Honestly, we didn't know you at the time. We didn't know you. And I'm like, man, yeah, you probably would have knocked that thing out the park because
she was self-employed for a year, I think, and the mortgage was requiring 2 years.
Yeah.
And she wanted to put $75,000 down.
And we were trying to talk to
on a $220,000 purchase.
Wow. And Misty was trying to talk to the seller who she represented to say, hey, this is not a bad deal. You can balloon payment this thing for a little bit. And then, because they even offered
to charge whatever they wanted in interest.
Yeah, they all, exactly.
It was
they
paid
offered
off.
to do it. And she's like, no, I just want to take the money. And I'm like, you could have got more.
So, yeah, those scenarios, though, it's like, okay, now we've tried. It's a good deal. Once you've identified the house, right? Like, all right, this is a great deal. What do we have to do to make it happen? And it's like, all right, we'll start this way. If it doesn't work, all right, what about this? Okay, well, what happens if we do hard money? Like, is that an option? What does that look like to exit? What do we have to do to kind of make it happen? And that's where, again, once the rapport on both sides is like, hey, this guy wants to buy it, and he seems legit. He's helping you help that realtor learn. You educate them. And then she goes, or they go to the client, and all of a sudden it's like, okay. Because again, they're relying on the realtor. And if the realtor, to your point, doesn't understand it, that makes it very tough to kind of know, is this just a scam? Because everything's a scam nowadays. So it's like, if you don't understand it, it's a scam.
Yeah.
So it takes a little bit of, again, information.
They're gonna recommend against it.
Yeah. Oh, very easily. And that's why it can kind of be like, all right, here are some websites. And I've actually spoken to realtors when it comes to, because a lot of realtors also want to be investors.
Yeah.
And it's, oddly enough, a lot of realtors are not investors. And you would think they would be because they have a pulse. They see the houses before anyone. Yeah. And it's just like they don't, their finances aren't where they need to be, or they just have seen too many things go bad and they're like, oh, I don't want any part of this.
Yeah.
Sometimes educating them and saying, hey, here are some videos. That's why if like you made your own videos, a YouTube video, or you showed them different maybe resources for them to go and do some research on their own, then they can come back and say, hey, yeah, this isn't that bad of a deal. Or again, different ways, even if say the realtor wasn't there and you met a homeowner just organically who wanted to sell a house, and maybe they weren't in a position to owner finance, because that's a majority of people aren't in that position.
Yeah.
But maybe they are in a position to sell you that house, and you're going to do a BRRRR, and you're going to buy it with hard money, fix it up, and refinance it. That can be a struggle too to get them on the same page. So that's where I've worked with when I do that, to kind of show them, oh, here's some resources. Here's what I'm telling you, but go check these out. Like, and then if you want to talk about it afterwards, let's do it.
Yeah.
And that has been such a better approach, because then they say, all right, I heard what you're saying. Let me go and research. They're going to look at the videos or documents you sent them, and then they're going to go get their own. And they're going to find, from a majority of it, that, okay, yeah, this is a thing. This isn't made up, and this is as good as it sounds.
Yeah.
And that is a very, again, you're building rapport. They're trusting you. And again, at the end of the day, it's not like, now there are some that do, right? There are some investors who just straight up try to screw people. Absolutely. But most of them, what they want is a win-win for everyone. They want to get a house at, cheap enough for them to be able to cash flow and make money on. But they also want you to make money as well. It's not like they want to steal your house. So it is, again, it's that education. And that's where it goes back to like when I was teaching or wanted to teach. It was like I could educate there and educate kids and love it. But now I get to educate adults and say, hey, we can do this. Or again, just educating them on how to get like financial like knowledge about their own finances.
Put them in a better position.
Mm-hmm.
Yeah, absolutely.
Change their life.
Yeah. And that honestly, that's, I'm starting my unselfish plug. I'm starting a weekly.
Plug away, man. Plug away.
I used to do like a weekly. It was actually like a monthly thing at the time, but quasi-monthly. It was sometimes 3 weeks or whatnot. But it was like an in-person like investment group, and we were up in Flower Mound, Highland Village, because we really didn't have a lot up there, and that's where I'm at. And then COVID hit, and it kind of like disappeared. And now I keep getting a lot of people who are asking about this, especially now when interest rates get high. Everyone gets creative now. And we're starting back up in December, like a weekly like Zoom call. It'd be like an hour. But in those things, my whole approach to it, like if anyone ever goes to Bigger Pockets or some of these other, forums, you hear people talk all the time. And it's, hey, I have 100 doors. I have 50 doors. I have 1,000 doors.
Yeah.
Awesome. That's great. You did well. And no one wants to talk about how you got your first door. What was it like to do that when you didn't have a lot of money? And I try to keep my stuff when I talk about like, what happens if you're a fireman, a policeman, a teacher, someone who doesn't have a ton of money? How can you do this? How can this happen when you, and maybe you don't have time to go, bird dog and find these homes. How do you do this when you're buying a home off the MLS and you have a little bit of money to put down and you're not doing creative financing? How can you get into an investment house? What does that look like? What are the steps to do that? And that's the biggest thing I like to do is say, hey, because I was that person. We didn't have a ton of money. I mean, and we were able to take a chance and do a rental. And then it was like, if you do it right, you can snowball and do as many as you want. Once you find the house, that becomes the hardest part. But in the beginning, finding the house isn't the hard part. It's how do I even do it?
Yeah. And
that's what I like to go into and make it approachable for everyone. Because at the end of the day, there's reports out there. Gosh, where was it at? So it was Kiplinger. They had a report where they talked about like the net worth of people. Like if you were in the top 1%, you had to have like a total portfolio or net worth of about 10 million. But then when it dropped to the top 5%, it went down to 2 million. And then the top 5%, it was $1 million. And of all of those people that were the top earners or net worth in the US, 2/3 of their income came from real estate.
Yeah, it's crazy.
Across the board. Like it didn't matter if you were in the top. And again, can you hit the top 5% of Americans from net worth with real estate at $1 million?
Easy.
Yeah.
That's easy.
That's like your primary residence and 2 rentals.
Yep.
Yeah.
Like you're there.
It's faster than people think.
Yeah. And it's just, it's mind-boggling for a lot of people because it's like, gosh, that's crazy. And some people are in a position where they don't even have a house yet. So and that's another thing where you get to say, all right, where are you? What can we do today that will help you get into a house tomorrow? And then not just that, it's not transactional. How do we from there help you get into a rental?
A lot of it's mindset first.
Yeah.
Yeah, I know that
I don't have money or I don't have time.
I remember the first time I'd saved up from teaching at the Jiu-Jitsu Academy. Misty was working, I was working. I saved like $80,000. I didn't know what to do with it. I'm like, that was me like every month putting money back, teaching jiu-jitsu, putting money back. And then I'm like,
that's when a typical single family home was $100,000.
Yeah. It's like 100,000, right? So I'm like, my buddies like, they're like, I'm gonna sell my house, and they're like, Story will buy it. I'm like, I'm not buying that. It's not the house I want. But it was 80,000.
Yeah.
And I just didn't know what to do with it. And then but it started out with one home, and then to another, and then this is the one we bought that we actually didn't live in. It was the third one, and we're like, it was nerve-wracking.
Yeah.
The mindset of like, because our mindset on the first house was like, what the heck's gonna happen if we have 2 mortgages? That was the scary part.
Yeah.
That was the scariest part of all of it. The 2 mortgages was enough. We actually thought about selling it, or you tried because of that. So no, I'm with you on that. I agree. It definitely is the hardest part is getting that first one. And if it's not full time, everybody should have at least a couple rentals.
I mean, the benefits. Again, the tax benefits. People don't understand that when you depreciate, and especially now with the accelerated depreciation you can do. It's like you can legitimately on a house like the contractor who had that house and he's cash flowing almost $400, right?
Mm-hmm.
$4,800 in cash flow. He could literally stick in his pocket if he wanted and have that extra money. He's going to pay 0 taxes on that.
Yep.
He will pay no taxes on that at all. In fact, it's actually going to lower his taxable income on the other side.
Yep.
Mm-hmm.
So
Absolutely.
he gets, and that's the amazing part of rentals. That again, most people don't go into as much, but they look at it and they're like, well, you know, I'm getting a house, I'm getting appreciation, they're paying my principal down. Those are only realized if you sell or refinance, but the other ones are real.
Mm-hmm.
You get the cash in your pocket each month and the tax benefits. But
Yeah.
again, if you don't have a rental and you're just, you know, you're a fireman, right? And you're working, you don't have a business. You don't have a Schedule C. You don't have any deductions. But once you get a rental, well, now you can start having home office deductions because
Mhm.
you know, I need this to manage my rental. You're going to have expenses to help lower your taxes.
Yep.
And it's impactful for multiple reasons. But again, it's kind of like what you said. You get the confidence now.
Yeah.
Once you get that one rental, it's like, oh, I can do this. Okay.
Yep.
If I can do one, I mean, how hard is it to do two? And you do two. It's kind of like kids, right? You have one kid and you're like, oh, this was tough, but maybe we could have another. And you have another, and then you get to a point like where we are, and it's like, well, that's a difference. 4 or 5, it's all the same. Like it's just survival most of the time.
Honestly, I want a third. I want a girl. We're not going to do it, but my scare on that, what I'm scared about is the going back end of sleepless nights and stuff.
Yeah.
And I'm like, I don't know if I want to go back.
Yeah. We did the gamble. We did boy, and then third one was a girl, and it was like, oh, then we adopted. But yeah, it was
That was what we were talking about.
third one was the girl, and we were like,
Adopted.
all right, we lucked out. But yeah, it was.
I'm like the going back in. I'm like, I don't know if I want to go back in. I don't know, Misty.
Start all over.
We've gotten to here, and the kids they're at 8 and 10. We're squared away. So
Yeah, you're at that age where it's fun, right? They still like parents. They
Yeah.
still like everything you do.
they'll give you a hug. Love you,
Yeah.
Dad.
Tuck me in.
Tuck me in.
Yeah.
Good night, Dad. Yeah.
Our oldest is 12, so I haven't gotten to the point where they like are rejecting all things adult yet. But you know, we
Eventually.
try to keep them to do the same thing. My problem is the oldest two do jujitsu, so I get to train with them and we get to do stuff. And as they get bigger, it's like, well, now we can train together regularly.
Yeah.
And that hopefully is what I'm like. All right, we'll hold on to that, and it'll be something, you know,
Yeah,
they'll try to beat me up, sort of thing.
Yeah, we're trying to do the same thing with our oldest Jake. We bring him into the training with me now and not in the kids' class as much.
Well, that's a good
Huge.
motivator for you because if you stop training,
Yeah.
your kid's just going to beat you up.
Oh no, he will never. Yeah, I can't. I can't, man.
like that's
Can't let
it.
it happen, man.
We used to wrestle, like play wrestle with my kids, and you know, we put them in headlocks or whatever. And
Yeah.
now the problem is they're like Kimuring me, and they're like I'm like, get off my butt. Like they know how to hold me down, and I'm
Yeah.
like, this is terrible. My wife is just like, I don't wrestle with them.
And it's
At
going to
all.
get worse when they hit that, especially as they go from 12 to 13, 14, 15, and the next thing you know, you're like, even though they're not actually grown, you got a full grown
Yeah.
man or woman on your hands that's going to be knows how to move.
Yep.
Like, that's even worse. Even those teenagers are hard to deal with than anything than some of the adults.
Yeah.
You know.
Well, the great
Way
thing
harder.
too, I talk about with the kids is that all this real estate stuff, at the end of the day, it is such good life lessons for these kids.
Mhm.
Yeah.
Like I'm able to talk to them and I literally explain. I mean, it's like Monopoly. I tell them like, hey,
Yeah.
bought this house and I have to pay the bank because I borrowed money from the bank. Why'd you borrow money? Well, I didn't have enough money, so I had to borrow it from them. Oh, okay. And then I have to give them extra money because I borrowed their money.
Yep.
And then, you know, they don't really understand. I'm like, well, if I took $1 from you and I kept it for 30 years,
Mhm.
would you like me to give you $1 back, or do you think you'd want a little extra because I held your dollar? And they're like, oh, I'd want more. I go, just like a bank.
Yeah.
And I'm like, I have to pay the bank. And then the tenant, the person who lives there, they get to live there and be my guest.
Mhm.
And they pay me a fee where I make a little bit of money and then I'm able to take the rest of it and pay the bank. And they start to kind of see like how money moves and how it's a tool. And it's also a blessing for these people now that get to live in a house. You know, why are they renting from you? Well, maybe they're in a position where they can't buy a house, or maybe they're in between, you know, they don't know if they're going to move to another state and they don't want to
Yeah.
buy a house. And there's a lot of reasons why, but we're able to offer them something. And so they get to see, okay, we're helping them. We make money off of it. And then they also learn how to, I pray, like, I want my kids just to be tradesmen. Like, I'm like, one of you be an electrician, one of you be a carpenter, like, please, because they're so hard to find and they make great money. They make their
Yeah.
own schedule. And I'm like, the fact that they get to go in there and see the before and after. We just finished a house in Louisville, which was a burr, and it was, it needed about $68,000 worth of rehab, and they got to see what it was like before. I mean, like things caving in. It was fairly rough. It had been lived in. It was an original home. He had lived in it, raised all of his kids in there. The kids are like, late 20s and whatever, and he's had this house forever. And they got to walk in and see, here's this haunted house, as one of my friends put it, and then to see what it looks like after. Right. And in their mind, it's crazy for adults to see that. Like, wow, that's why HGTV, right, is so alluring, because we like the before and after.
Because that's in 30 minutes.
Yeah, that's in 30. Kids are just like, is this the same house? Like, they're just like, did you take me to the right place? Like, it's just so different. And they start to respect, and that's the biggest thing, they start to respect what tradesmen do.
Yeah.
And, without them, they get looked over like, oh, they're not as, they're sub, or they don't do things that are as important for culture. It's like, no, these guys and ladies are the ones who are changing the way neighborhoods look, changing the way that renters get to live in their homes. Because there's some landlords, it's just dilapidated. It's terrible. They don't take care of anything.
They don't fix anything.
And when you see ones that do take care of everything, and you're like, wow, they have pride in living there. They have pride in owning it. That is because those tradesmen were able to make it look the way they do.
Yeah.
And it's like, those guys deserve to get paid. I hate the investor-friendly word. That just means, hey, is there a way you can take a cut on this so that I can make more money?
Yeah.
I mean, I get fair pricing, but yeah, these guys and girls that come in here and do this, they do amazing work. And to let the kids see that, it lets them kind of see like, hey, bankers are important and contractors are important, and everyone in between are needed to make something like this happen. And it's awesome to get them in there and get to be a part of it. Like my second oldest said, all he wants to do when he grows up is run a jiu-jitsu school and do real estate investing. That is it. And I was just like, he's like, do I have to go to college for that? And I'm like, no. And he's like, oh, perfect. I'm like, that's the dream. Like,
heck yeah,
and my older one's like, hey, can I just, he wants to run a YouTube channel. So not quite the same, but
No, you can tie that to your real estate.
He might be a contractor.
Yeah, exactly. You can do that. He can manage it. So
have him tie it to have a YouTube channel and be like, here you go. You're officially in charge.
He's more in the line of Mr. Beast and like doing ridiculous things all the time. So I need to kind of, guide him into a little bit more of a realistic.
So let him do some of that in the haunted house before it gets changed over to the nice house. Like, here you go.
Let him do the demo. Like,
exactly. There it is. The demo YouTube. I'm sure some kids will watch that.
I'll get a call from OSHA. I can already see it. Child's CPS will get called on me. I'm like, oh, well.
Son, you can't do that. You're not supposed to do that.
You can do it. You just can't film it. Like, draw the line somewhere. But
man, I love it, man. Let me ask this before we kind of wrap it up. Any advice you'd give to anybody or any investors, or just on whether it's on the mortgage side, insurance side, or just what advice would you give somebody? Just a quick, like, I think this is probably a good thing that someone needs to know.
Just do it. I mean, it sounds very cliche, but again, the biggest thing I talk to people who wish they would have done real estate is that they just would have tried. And I get a lot of that comes with unknown and fear. And again, like you said, when you had $80,000, that's all of our money. Like, what happens if we do this wrong and we lose everything? That's not lost on me, and that's not lost on, that's where you get kind of the out of touch with people. Is it's like when they get more money, they're like, oh, that's just do it. It's not that bad. It's like, no, that's a lot of our money going there. Yeah. And if you surround yourself with people who know what they're doing, and they're an advocate for you, they're not going to let you get too far off the rails. Once you've gotten that in place, you just got to step in. And again, the first house is not going to be amazing, but you will learn more from that than you will any book, anything. I have a friend of mine who bought land, never did it in his life. It was a train wreck, but he broke even.
Yeah.
But you know what? He learned more about what it takes to get land and develop it and doing all the infrastructure and the permits and the city and all that kind of stuff that he ever could have done reading a book or watching YouTube or listening to podcasts. Couldn't have prepared him.
Yeah.
And again, he broke even. Is that a win? Absolutely. Like we talked about jiu-jitsu, small win. That is a huge win in that scenario. He didn't lose money. Again, if you're going to think about doing investing, you need to, I always say, start with the lending.
Mm-hmm.
You need to figure out, can I buy this, first of all?
Yeah.
And if I can't, or if you're thinking, oh, hard money, I'm going to do that, can you get out of it?
Mm-hmm.
So the lending part is probably, to me, the number one thing you do after you've determined what type of investor you want to be.
Right.
Do you want to do short term, long term? Do you want to buy nicer properties, or lower income properties, or
Mm-hmm.
lower quality properties? Figure out what type of investor you want to be, and then go to lending. And again, all you're doing is figuring out your team, and your team starts with yourself. What do I want to do? What am I good at?
Yeah.
Am I so busy that I don't have a lot of time for this? Okay, if that's the case, you're not doing short-term rentals. Like, you're just not, because you don't have enough time, and you don't want to pay 30% to someone to manage it for you. So you're like, all right, I'm too busy for that. Do I have enough time maybe to do a single family home that's close to me or far away? Probably not, because you're going to now add drive time and stuff.
Mm-hmm.
So you figure that out. So your team starts with yourself. All right, I know what I want to do. Now I'm going to find a lender. Now I'm going to find a realtor. Now I'm going to talk to them and probably find a title company, because they're going to be able to refer stuff.
Yeah.
And the great thing is all those team members you did, they all know contractors.
Yep.
It makes it really easy when you have people who are in it. If someone comes to you and they know that you do real estate investing, they're like, hey, do you know a floor guy? Chances are you know a handful. You know a lot of ones that are bad, because you've weeded through a lot. But that's the great part about contractors, is that all the people who are in it, you can talk to those professionals and they have an abundance of knowledge, but you have to find the ones that do it. So once your team's built, you just do it. And again, don't be discouraged if it's not the best one on earth.
Yeah.
It's just like, you're going for the ride. I guarantee you your second one will be better than the first. It's just, you got to try.
And do jujitsu.
Do jujitsu if that's
both real estate and jujitsu. They go hand in hand.
Yeah,
Man,
absolutely.
it's been awesome having you on. I've got way more stories. I know we can't go forever, but definitely to bring you back on another day and talk some more. So, man, thank you for coming out. Plug yourself, man. How can everybody, for mortgage and stuff, and then also, Zoom as well. Like, when you starting that up, kind of talk about that.
Yeah.
Tell us, when, and I can help, when things, let me know when that starts up as well for when you're starting the Zoom calls. But yeah, how can people reach you if they need to find out about mortgage, insurance, or?
Yeah. So lending, they can email me, trevor.reed@nxtmortgage.com. Our website again is NXT. So like the word next without the E in there, mortgage.com. And, our brokerage is awesome. I mean, we're veteran owned. We are fairly new in the sense, we're 5-6 years old, but we're one of the top ranked ones in Texas, and our community is our biggest thing, culture and stuff like that. So, people go to our website, they're going to see that first thing. If they talk to anyone that works with us, they're going to see just what that's like. And from the top down, our broker, Tyler, is awesome. Leads by example, which is how most things should be in most companies. So it's been great to work with them. And I can be reached there. They can check the website out. And then again, insurance, I kind of just do that as needed with the people. But I'm happy to. I tell people all the time, I'm happy to be a resource, whether they use me or not. I just want people, again, to have the ability to set stuff up for their family. And real estate, there's just nothing better. So at some point, I figure if I help people work with other people a couple times, they'll eventually be like, hey, can we just use you going forward?
Yeah.
And that's usually what happens. So I just try to be a resource in any of those ventures that I can. And that's always been kind of my philosophy. It's always worked out much better that way, when I can, again, build rapport with someone and say, hey, I'm gonna live like this. I'm gonna do this, and you can watch me from the sidelines, or you can be a part of it and ask for help. Either way, I'm good with that.
Yeah.
But
on the Zoom, are you going to be starting that? You said starting that up
first
in
week in December, and it's probably going to be on a Wednesday. It'll probably be more approachable, kind of in the afternoon, something of that nature. And right now, and gosh, I just have a ton of emails. I've never liked the in-person ones as much when they involve tons of vendors. I hated that it was all sales pitchy. Because oftentimes what would happen is you get in there and you hear 10 minutes of something useful, and then it's just, hey, let me tell you about luxury vinyl planking and how this is so much better. And it's like, we don't need all that. So I try to keep it, I run it very similar to like I think of it like a men's group, like through church. It's like the first 30 minutes, or, it'll be an intro in the beginning. I try to keep it to an hour, so it's respectful of everyone's time. And if it's weekly, that's totally cool. and then we'll talk for, I kind of have an outline of we're going to start from the beginning of an investor and go through, and, it'll be like 30, 25 minutes or so about that. And then we're going to do Q&A and then have some like wins and losses. Because I think it's really good for people to be like, it's like, prayers and problems sort of thing. Like, hey, yeah, this has been awesome. Let me tell you about a deal that I had. It was great. And then I also want to hear, hey, this was terrible.
Yeah.
Let me tell you why. Because then everyone's kind of learning the good and the bad.
What to avoid.
And it takes off that facade like we're all awesome. Because at the end of the day, we all are not awesome.
We're not. I agree.
We have way more problems, right? And that's the one thing we always share. And it's like everyone who puts up the facade, it's like, I know you're not as cool as you think you are. And like, let's just knock that out. No one here is a billionaire, hopefully. If they are, let's talk. But yeah, usually, and that's kind of how I like to run it. That way people come out of it, and it's with that lens of you're a firefighter, you're a nurse that is you make money, but you don't have time, or maybe you don't make money, but you have time. Yeah, like it's like approachable in that sense. So that's what they're going to be set up as. But right now, I'm plugging it mostly through Facebook. It'll be more official once I finalize the time on Wednesday. But
are you going to record them?
Maybe. I need to see what I think everyone has to be on board with it. At least the video part of it, but the audio.
Zoom covers that. This is now recording.
I guess they probably do, right?
It's officially, you're on board.
Hit okay. If
they just let everyone know. Please wear clothes, people. That's my one requirement in the thing. But yeah, we'll get that out there, and it'll be, like I said, Wednesdays, and it'll be very kind of go and flow sort of thing. But I think it'll be, again, it's aimed towards the fact of people building wealth through real estate, and whether it's you're knee deep in it or you're just starting, I want to make it so that anyone who's there can approach it. And again, hopefully using my knowledge of the different industries and what I've done doing the asset management so long, hopefully be able to help people out along the way. So that's looking forward to that. But yeah, you can find me on Facebook, or I'm in a number of different that investment group. I forget what it's called, DFW investment.
Yeah,
or something
we see you all
like that.
through out there.
We're always messaging someone, I guess.
Man, well, I appreciate you coming on. Thank you. Fantastic stories. Definitely drop some knowledge bombs as well. And guys, I hope you guys enjoy this episode with Trevor Reed, and we'll catch you guys next time.
Awesome. Thanks, guys.